Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thank you for making time today.
Good afternoon, Devin.
Well, let's start with the earnings from Samsung. It's had its best quarter on record, operating profit up 45%, and it says it's looking to a rebound in its chip business in the second quarter. Tell us a little more about earnings at Samsung and what the next quarter might bring.
Samsung Electronics, the world's largest memory chip and smartphone manufacturer, had 7.1 trillion won, or $6.4 billion net profit in January-March period. This is up 45% from earlier. This robust business performance of Samsung Electronics is a kind of surprise because Samsung Electronics memory chip business was weaker due to memory chip price declines in first quarter. But instead, mobile, consumer electronics, and display divisions altogether posted best ever first quarter performances. Samsung Electronics also expects the memory chip unit is projected to see improved business in second quarter on the back of strong server demand worldwide.
And as we just heard, in the U.S., the Federal Reserve has decided to keep interest rates where they are, near zero. They're still waiting on inflation to come up to 2%, still waiting on full employment. But it's been a year since they cut rates at the start of the pandemic. Tell us about the Fed's latest decision.
U.S. Fed held its key interest rate near zero and said it plans to continue supporting the economic recovery while acknowledging progress in growth and employment. The Fed's decision of fixing interest rate is pretty much expected previously, so it did not much affect the market yesterday and today. Fed officials reiterated Wednesday that they will hold rate steady until the labor market is back to full employment and inflation has reached the central bank's goal of average 2%. Most of market participants indicated that they expect Fed to leave interest rate near 0% through 2023.
And now turning to the markets, stocks in New York closed a little lower on Wednesday, despite the Fed keeping rates low. As you said, this was an expected decision. This time it was the Dow falling the most, though, by about 0.5%. What's the story in the global markets?
There was a slight decline in U.S. market yesterday. Dow Jones, where blue chips are listed, decreased by 0.5%. And NASDAQ, where tech stocks are listed, also decreased by 0.3% in a single day. But Asian markets and European markets moved in the opposite way, over 0.2% to 0.6% positive returns. And this has been generated by U.S. Fed's key interest rate fix and U.S. Biden administration's $1.8 trillion size spending, additional spending actually, proposal on childcare, education, and paid leave.
And Korean stocks today were up and down during the session, but in the end we were lower across the board. The Kospi slipping further below that 3,200 point mark. The Kosdaq again under 1,000 points. Tell us about the local market.
Today, domestic market is much affected by U.S. market's negative return yesterday. Domestic market had negative daily return over 3 straight days until today. Actually, in the morning session, Kospi has maintained a marginally positive return, but it dropped down to negative return in the late afternoon. This is mostly due to foreigners and institutional investors' huge sales. Kospi dropped by 0.2%, and Kosdaq had negative 0.8% return today.
And let's talk about commodities for a minute, Professor. Oil prices are up a little bit, with U.S. inventories rising less than expected. The price of gold coming down a little bit, too. So tell us what's happening in terms of gold and oil and your outlook.
international oil price increase as expected demand on crude oil increases. This increased demand for oil is driven by economic recovery after the end of the coronavirus pandemic. In addition, oil-producing countries' production cuts also help to raise oil price these days. Western Texas Intermediate increased up to $63.86 per barrel, or 1.5% increase in a single day yesterday. Gold, which is considered as a safe haven asset under risky situation, declined yesterday by 0.3%. This decline of gold price is related to faster than expected economic recovery in U.S. Along with accelerating vaccination. So this kind of movements of international oil price and gold price will be continued for a while.
All right, Professor, we'll keep an eye on it. Thank you, as always, for sharing your insights with us today. We appreciate it.
Thank you very much.